S&P rallied on the Fed pause. Nasdaq rallied well and sitting at a critical level. Semiconductors continue to break out. We're going to show you which ones to focus on for tomorrow. Financial sold down. We're going to explain why. You can see clearly here that the regionals did not take the news too well, and we'll explain exactly why they got hit the hardest. What the spread on smart money, dumb money is telling us. Home builder stocks surprising earnings after the close. Unity Software's major breakout, why, and what to look for next. What Oracle's reversal today is telling us about the market. We have a lot to go over, so let's get into it. Hey everybody, welcome back. So we saw a really powerful move today and we went live for the Fed call. You can listen to that later. I'll actually link that one at the end of this so you can hear it. But the bottom line here is let's talk about what happened. So you can see very clearly right in here how we're holding, right? We were holding, 43, 43, and then boom, broke. Everyone remembers 4,200, how that played out forever. So you should be noticing a pattern. And we're going to just talk technically for a second. And the pattern you should be noticing is that they are stepping us up. Now, they are stepping us up in a couple different ways. We have the higher lows that they are stepping us up. And look at the trajectory starting to change now. So now you're getting these different kinds of changes that are starting to happen. So not only did you have a trend, but now you have a new trend line that came back down and formed. So when these start fanning out, that actually means that the move is possibly going to accelerate. Okay, that doesn't mean that you're going to go straight up. You can absolutely come back down and then bounce. And that's what I would suggest that you do. There are actually some ideas that we did today on the call, and I'm going to walk through them. But I would pay very close attention to this. Putting in moving averages is absolutely a waste of everyone's time. You're above them. You should be able to look at that and see that. That's not really going to do anything, me dropping in an anchored VWAP and pointing at it. I mean, it's pretty obvious we're high. So let's just get to the stuff that really matters that you can profit from. Number one, look at your volume. And we're just going to use the futures market. Look at your volume today. Does that look like volume that's going away? Or does that look like people that were waiting for something to happen? So the Fed came out today and what did they do? They did nothing except scare the market and say, oh, by the way, we might raise 50 basis points if things get bad. Well, if you're going to raise, then you raise now. And it was kind of funny. One of the guys even said to him, and I just want to point this out before I go further, here you are on this volume. Here's your second time that you were at that volume. How'd that go for a bottom, right? So your bottom's marked here by that volume. Okay, here's another volume that you're over. You can see the spike, sell off, and pullback. Here's another volume spike. What did that mark? The bottom, okay? So when you go through these volume spikes that we're looking at, what did that mark? The bottom. Okay, here's one. What did that mark? A bottom. That didn't lead to a full bottom, but nonetheless. So here we are back here. 1, 2, 3, 4, 5, 6 times. Okay, 5 of those 6 led to a bottom. Do with that what you will. And I will hear from people saying, well, this couldn't possibly be a bottom. Okay, I'm just going to look at the numbers and I'm just going to tell you what I see. You do what you want with the information, right? I'm not in the habit of telling the market or anybody what is going to happen. I simply analyze and point things out that I find interesting. That's how I trade. And I can just tell you that this is big volume. Now, for me, why this is important, I have different volume profiles here before I continue on the next tangent, but I want to just go through this so you get it. When you're looking at this and you start seeing above all my levels, that is above average volume. It is very rare and very hard for a volume bar to get to that neon green. If you look at the past 2.5 years, you could really count the amount of them that actually were able to get there, right? Maybe 20, okay? Now, what does that tell us? That tells us that this is significantly above average volume. So you're pushing through here right now. Now, Powell comes out today and makes a statement. So let's talk about this and what happened. So here we are in the ES and we drop, they pause. There's a 92% chance that they were going to pause. We went over that yesterday. And now what they did was we sold down on the pause. Why? Because they raised the terminal rate. The terminal rate is what they're shooting for. Let's just leave it at that, right? It's the easiest way to explain it. And what they're saying is, oh, it could be 5.5, 5.6. Well, they're insinuating there's 2 other hikes out there. No one's believing that. And I'll show you why no one's believing it. Here's 2:30 in the speech. What happened at 2:30? And we talked about this live. And I was very clear on the live call today. We did it publicly. Make sure you subscribe to the channel because what we go over here is extremely timely and actionable. So what happened here? No one bought what he was trying to sell. Like, oh, we're just going to slow down. No, you're done. You have the single greatest drop on a percentage basis in CPI since the pandemic. Okay, period. You can go measure it yourself. So here's our level. We broke down, came back, retested, and now if I move this H out of the way, let me clean this up. And so you can see the H yourself. So we retest the H, we hold, we reverse. So now we have a failed H pattern right in the PAL. And then what happens? Test the level, test the level, test the level, and now look at where you are, okay? It is very clear no one is buying what he's selling, but that does not help everyone. It will help technology because tech just basically blew it off. Now, what you want to do with your charts is go mark that 2 o'clock level. Go look how the Nasdaq made it support almost immediately, okay? And then you go back to the ES and you realize how the ES almost immediately made it resistance. Where's the money flow going? Money's going into tech still. And this is why you could actually see tech accelerate. And I know that's a weird statement to make right now, considering what we've already seen with the acceleration. But we started to see rotation into financials. And then this is the 2 o'clock level. Like, this is why I'm saying go through all your charts and mark, that 2 o'clock level and go see what happened. Well, you came out and you said you're going to increase the terminal rate. So if you're a financial institution, you can't plan effectively right now. You don't know when they're going to raise rates again. Do you go out there and buy 1 years? Do you buy 3 years? Which treasury are you supposed to buy so that your clients can get the most deposits, so that you hold the most money in deposits and there's not a run on your bank? And the question is right now, you don't know because you don't know when they're going to raise again. Okay, so instead of just leaving the terminal rate where it is and leaving the door open, okay, they came out with this, and they did this, in my opinion, to flummox the market. There's no reason to make these two statements the way that they made them. There's nothing out there except the robust unemployment that you could do this with, but let's get to it. So now you have the undercut here in financials. I'd be really careful with regional banks now, because if I'm a regional bank, I'm looking at that, and you can go look at the 2 o'clock level. Regionals never came back. They never came back. You go take a look at semis, right? And look at 2 o'clock on semis, okay? And they came back with a vengeance, right? Cloud stocks, okay? Not with a vengeance, right? So you start seeing this, and you start being able to differentiate with what's going on. XBI, okay? 2 o'clock, right here, came back. So you want to start going through them and seeing what came back, what did not. Industrials never came back. Okay, where do you want to put your money, right? So how are they supposed to hedge their dollar risk if they don't know what you're doing? Okay, so that's going to lead to people saying, I'm not playing this stuff. I'm just going to go play tech, because it doesn't matter what you do, because AI is going to, it doesn't matter if you believe it or not, but AI is going to revolutionize the way people do business, right? That's the theme right now. I'm going there because I don't have to deal with your nonsense and what the dollar is going to do, because we don't know when you're going to raise rates or not raise rates. Here's 2 o'clock, okay? And here's his nonsense. And then you can see how we acted from there, right? And it made life very difficult. If you go here and take a look at the 1-year Treasury, okay, we spike up. Well, if they believed it, how come it didn't go higher? How come we went up 10 basis points and then we stopped, right? Doesn't really make a lot of sense. All we did was sell off. They sold their bonds and then they spent the rest of the day buying them back, right? So when you start to see this kind of stuff, it creates uncertainty. That uncertainty is not going to go over well with regional banks. It's going to be a real issue for them. Now, this is speaking from someone that has positions in regional banks. And the regionals that I own, I'm not doing anything with. And I'll walk through those two that I like a lot, but you guys should know them by now if you've been watching for a while. We have a real battle going on at this level. And I'm not so sure that this news today is what gets you over it. Now, you are trying to base here. You have this, right? You have this trend, but you could come back and fill in. This is not something that's going to make people feel really warm and fuzzy. So we'll see, but let's go through these two. NYC is the one that I have the largest position in. We bought this when they were able to buy assets from FDIC approved assets right here. Same thing with FCNCA. These are the two you want to focus on. I've gone over this ad nauseum since this happened. Remember, the FDIC has access and research to things that you and I do not have, right? So because they have that access, we want to pay attention to that, and we want to utilize their expertise to find out which one of these we should be buying. And that made it very easy. You can see as soon as they were able to buy assets, what happened, right? I mean, as soon as they were able to buy assets, SIVB, look what happened. And NYCB was Signature, same thing. These stocks, these are the two that you buy. But am I going to go out there and tell people that they need to be looking at like Pac West now because of what just happened? No, I would be on the other side of those, right? I mean, if I'm a regional bank right now, I'm looking at this going, you just made my life really very difficult. And I'd be real careful with the regionals right now until there. Now, I think the other banks, the big banks, they'll be fine. They sold off. That is a reversal bar. I own Goldman. I'm not down in it yet. If I get back to break even, I'll probably get out at this point. I'm not really crazy about that particular position, and I'll show you exactly why right now. My 200's right here. Like, I don't want to be that guy that owns this thing, breaks the 200, and then I'm waiting for it to get back over. So I'll just pull the plug and then move on with my life and then get back into it. But this was disappointing because he created more uncertainty for the regionals and for the banks today, and that's why they sold off. But now you have to think about like, okay, well, how can we take advantage of that? Well, on the call today, what we did, and we did this live, we went over a bunch of these names, and one of the ones that I was playing actually on the call was NVDA, and the reason for it was relatively simple. As soon as you pulled back, you could just see how we just would hold. And there were a couple of really very simple trades here, pullbacks, bounces. And then once that bottom was in, it was glaring. So I use RSI a lot. And I teach it in the Alpha Chasers community, and I try to teach people to use it. And I'm just going to say this. I know people will say, oh, I was watching this one guy's video, and it made me laugh. He's like, oh, I don't use that. You can't tell me that something like that is going to mark a bottom. I use other techniques. Well, we changed, just so you know, I have these changed in here. These are not the normal RSI settings, but the reason I bring this up is it just made me laugh because you have to understand that this is a tool. RSI is a tool. Okay. And if I put this tool in someone's hand, then they might say it's broken. Okay. Someone else could use this tool and make me look like a fool with it because they're so with it, right? So it's like anything else. If you give a carpenter a hammer, dependent upon the proficiency of the carpenter, they're going to get what they can from that hammer. Okay. So when you hear someone say this doesn't work, that doesn't work, it's irrelevant. Does it work for you? If the answer is yes, then you utilize it. I've been using this for a very long time, and it's not the be all end all, but when I see something like this, I will pay attention. I certainly won't sell if I see something like this because I know that you can't go any lower until you revert. That much I know, and you can go and back test that yourself. But the point that I'm getting at here is we were able to start picking off names like NVIDIA. We were able to pick off names like Tesla, okay, on these bounces. And we were talking about these live today. So I'd suggest if this is of interest to you that you listen to the live calls. We do a daily one every single morning at 8:30. But so you look at like Tesla, right, and that bounce. And then the other one we did was Oracle. Now, I want to talk about Oracle today because this is about as nasty as you can do to somebody. And this is telling you the kind of environment you're in. And we're going to get rid of the extended and we're just going to use the regular. So what I was watching here, we're going to get rid of RSI and I want to get rid of the moving average. And we're just going to read price for a moment and we're going to click off of this. So now if we drill into this morning, let's go to a 1 because I'll show you how vicious this was. So my thought this morning on the live call was if we break down today, you're going to have to be really careful because if we take out this low, then you could just see people panic sell their Oracle. So there's your level, right? And you can already see what happened after, but this tells you everything you need to know about this market. So we sold down, right? Weak hands, all in here, paper hands. And then all of a sudden you undercut. And what happens on that undercut? Right there. Okay, what happens there? All they did was just take everybody's sell stops, flush them out, and then just rip it. Okay, that is a classic institutional move. They literally just took all the stock from retail and then just bought the heck out of it. Now, to go back to what I was saying about RSI, and is there anything there that we should be looking at, right? And then you kind of come across here and you're like, okay, well, we were at that 30 level and this didn't come in as low as that. Maybe that's something that you should pay attention to, right? Because now you can see that you have this disparity in between what's happening, right? This is what you call a positive divergence. As you undercut here, Okay, that's pretty glaring if you really think about it. And then we bounced, and that was it. It just absolutely ripped. Now, this gets even more interesting. Look at what this stock did today after that. That's your undercut right here, where they took everybody out. Look at this flag on the hourly. You have a high tight flag on Oracle after all this, and now you're closing at an all-time high, right? This is like the simplest trade in the world, okay, if you don't have a position in this. Look at that. I mean, it doesn't really get any clearer than something like that. So what I want you to take away from Oracle today was that undercut, okay? You want to use RSI, great. You don't, great. But that undercut here, all they're doing is stop hunting. That's all they did was they stop hunted today. They did it with the Nasdaq, okay? It was very, very clear what they were doing here, okay? Very clear. Where did we come to, right? Where did we come to? Same place we came here. What's this level? Oh, that's the beginning of the day. Okay. So we come to the beginning of the day like we did around 10 a.m. We take everybody's stock from Tuesday. What do we do again? We flush and we take out everybody from Wednesday and then we bounce. Okay. That's all they're doing here, guys. So keep that in mind. And guys, in the general sense, since we have a lot of ladies that watch this. So now we understand what's going on with the Nasdaq. We understand that we can see tech names actually do better. One of the names I play the most has been the video. We've been talking about it ad nauseum. And you can see after hours, you're still pushing. I don't know that that's going to stop. I thought that it might have some kind of pullback today, but we hardly saw that. I bought it around like 416 and done fairly well with it. And we've been owning it in and out for a while, but I think you have to watch this. Now, the other one that we played today, and this one I really like. Here, let me get rid of this for a second. This is AVGO, and we bought options in this. Now, I thought we'd do okay with the options, but almost by the end of the day, I think they were almost a double. We bought the July 21st 900s. I think we paid 15 and change. They're close to 30 right now, or 28, 29, something like that. But they're just getting started, and I would suggest this because I went over this on Saturday and I'd watched Saturday's video. I'll link that one at the end as well as the live Fed today, just so you can see the live talk. But the important thing that I'm getting at here is I would go out further. I would stop with your weekly nonsense with the options and start going out like a month or two. Because if you can get up and in something like this, instead of you having to constantly re-enter, especially if you're in a bull market, and newsflash, you're in a bull market, as you can see this, and you can see how we're breaking out here, right? Why would I want to play with this? Why would I want to get out of these on Friday? Why wouldn't I want to try and stay in these for weeks? Right? What if I break through this and I continue to keep pushing, right? That way I have way more ability and way more flexibility. And worst cases, I lose profit versus being someone that's got to go out there next week and buy them again. It doesn't make sense right now, and you're not being paid to buy front-ended options. Now, you all know that quad witching is Friday, and we will get into that in tomorrow's video. I'm not going to get into it today, but expect a lot of volatility and then stagnation. So those options that you're in on Friday, most people are just going to bleed out, just FYI. So we went out a little bit further. LEN had earnings tonight, and the earnings were really good, in my opinion. So we're going to have to see how that plays around tomorrow. But I think after hours, we were up a little bit. Let's take a look at that right now. They were better than expected, I think. But yeah, you popped up to 119. We'll see how the conference call goes. At the time of recording this, the conference call was not there. So I have a lot more to go over. But the most important thing that I did research on that probably not a lot of people are going to show you is this. So that's what we're going to focus on. So I don't think a lot of people are going to focus on dumb money, smart money, the same way that I'm going to focus on it here. So this will and should add value. Now, for those that have been around, we don't refer to this as smart money. We don't refer to this as dumb money. This is institutions and this is retail. If you come here and take a look at it, you're going to notice that you have this huge disparity. Well, they would tell you that, oh, well, smart money's selling and retail's buying, so we need to get out of the way, right? And these disparities, when these spreads are that long, well, that definitely means that that's the top. What I would suggest is understanding what this data actually means allows you to make a more informed decision. In front of us is just smart money or institutional money broken out. And what we're going to focus on is something maybe a little bit different here. We're going to just look for pattern recognition. And this is really what I came out with and I think is somewhat important. That's going to bother me. Let's get rid of that one. There we go. And what I want you to do is note that here you are at that 50 and use that 50 as a demarcation line. So in other words, when you're here, you're exuberant, right, with the overbought, and when you're down here, you're oversold. But there's this little pattern I noticed that's going on. So if you take a look here, right here in July, okay, you got to a point where you were over your line, and then you got right here, right? You see that, where you're at that 50 level again, and then you undercut, and then you bounced up. Well, how'd the market do? And I understand people are going to say it's the pandemic, but when they sold out and thought that they were flat or had an average position, right? So if you think about the 50, it's roughly you think you have an average position the way you're boxed in here, right? 0.7, 0.3, and then you think the middle line is 50. Okay, so you get it. So, or 0.5. So then they realized, oh, well, we don't really want to own that. And then, okay, well, now we have no position. Okay, and then where did they get in on this market? Or pretty much the top, right? So when you start looking at it that way, I would argue that the fact that they're at 0.5 and they're down here, that's actually a good thing. Because what that means is that they're going to have to get back in the market. Are they going to sit out the market and the video is going to continue to rip? How are they going to explain that to their limited partners? They're not. They're going to buy stock. You know, the one thing we should discuss here is just how this game works. Everyone can have an opinion and their opinion can be right or wrong. But when you're managing money and you work at an institution, at some point you need to be right. And if you're not right, you have a problem. You either have a problem with your PM if you're a trader, meaning the portfolio manager and you're a trader of a certain sector, or your limited partners are going to be like, no, I understand your position, but you're not making me money. So even if you could be right a year from now, I want someone that's going to bang around NVDA and Apple and these names, and in 6 months, I'll move my money back to you. Okay, that no one wants to hear that. So if you start looking at the exact inverse, what's happening here? Okay, 0.5, and then what are we doing at that 0.5 right here? Okay, we're holding on what? Dumb money, but we refer to it as retail. Okay, so now we're sitting here up here. Well, that clearly means that we can't go any higher because now we've got all the froth and we've got everybody in. Okay, well, what about here and how that affected here? Was that the high? Because we went higher, right? So you have to start looking into these numbers and what they mean. For me, 0.5 and bouncing through is exactly what I want to see. And if I start looking and going, okay, when was the last time we only dropped? In other words, we undercut, but then dropped to 0.5. Now, for me, if I go through this, let's click on this right here and click on this for 5 years. If I go through exactly what I'm suggesting, right, where you don't come lower and you only get to the 0.5 level and then bounce, okay? I only have a couple times that's happened, okay? So let's take out the pandemic for a minute because everyone will say, well, that's the pandemic and 1.7 trillion was injected in the market, therefore you can't utilize it. Okay, fair enough. Valid argument in my opinion. So if you come here and you look at 0.5 where you were unable to get back down, 0.5, unable to get back down, and you pushed over, okay? How did that go for us from that particular point on in 2019 to here? How'd that go for us? Pretty good, right? Okay, I would not sleep on this. Now, that does not mean that everything's gonna go up automatically and we're never gonna pull back. Tomorrow, we really need to watch this level right here. Let's get this exact so that you can watch it. The high of this is 15,268.75. You're going to want to watch this bar and you're going to want to see what we do. Okay, you're going to want to get through this. Could we hit this, reject, and pull back? Absolutely we could. So we're going to have to watch this. This was a really powerful move today where we had a lot of money come in the market. We can obviously see that with the moves in NVIDIA and some of the other names like you. And we talked about this and suggested that I was going to go over this. And I do want to go over this. This is insane volume for this name, right? Out of nowhere today. And you didn't see the secondary names really moving like this. Now, this is something that we actually have in the Alpha Chasers community. If you are on the wait list, you should have gotten a letter. If you were on the wait list for a little bit of time, frankly, you should have got a letter yesterday. There were a bunch of people that asked. And if you're not on the wait list and you're interested in joining the community, link in description. So, but you can see how you're breaking out here, right? You can see that push. We're up a couple dollars in this already. But look at that volume today. Okay, that partnership with Apple is a big deal. And I don't know how they're going to do, but I know that Tim Cook is not going to want to flop. So I would imagine they're going to figure out some way to make this product work. And maybe this is the first stage of the product, and then they're going to come out with more different price points. $4,000 is a big, we can call it $3,500 if it makes everybody happy, but that's a big price point for people. And not everybody's going to want to write that check, right? So maybe that's where they start with the first version and then they lower the price and have different varying levels to it. I would watch this 42.29 because if you get through that, this can continue to push, and this volume is substantive. That's a lot of volume coming into this name, and you can actually see how all my relative volume lines are moving. Have a good night, everybody.